everyone, John Henry here, SlingshotFutures.com. Welcome to the daily futures outlook video for tomorrow's trading. Tomorrow being the 6th of February, going into 2/6 of 2018. Before we jump on in with all of the fun action here at the end of the day, especially in the on the index markets, make sure to swing on over to SlingshotFutures.com. Scroll down and click on the Join the Daily Outlook newsletter. From here, you'll be able to sign up for our email list so you'll be notified every time one of these videos comes out. But along with the videos, inside the email, we talk about all kinds of different things of interest. Stocks, crypto, futures, Forex, you name it. If it's moving or of interest, make sure to check that out because they'll be in the newsletter, and we just don't have time to cover that kind of stuff in the video itself. Of course, if you haven't done so already, click on the Live Trade Room subscription and trial info and sign up for a free 3-day trial in the Live Trade Room to see what we're all about. That way you can get your feet a little bit wet and kind of hang out with us for a couple days and see how we approach the markets every day and trade along with us in the morning session. So a couple things that we want to take a look at. Obviously, we'll get to the S&P in a little bit here. Starting off on the euro for the most part has been kind of range bound, not really a whole lot going on. The big move that I'm really looking for here on the euro is their response to the index markets of the US side of things catching a pretty big sell-off. Are people using the euro as a shelter market, or are they utilizing things more like gold and that sort of things as shelter markets? Likely gold will be the case, but it's always interesting to keep an eye on those index markets comparative to other markets like gold or like other currencies as an example. Cough, crypto, cough. Looking over on the euro, though, we're still just kind of stuck in a range. We're not really doing a whole lot, and when they tried to break out of the range highs, it was a complete failure. The anticipation is for the market to want to cycle down to the lows of the range and get that physical test that we've been waiting for, that previous swing high. We've been waiting for that for about a week now. So looking for the market to want to slide back down over to the lows here and try to get a test in the overnight session of 23,695, if possible, to see if we can get a little bit more follow-through. Really just kind of looking for the market to want to reclaim those lows. They failed on the highs. They didn't get a breakout through the top. So the anticipation is that they go back down and reclaim those bottoms. And, you know, from there, we'll have to wait and see what they want to do. Now, overall, on the euro, the game plan really isn't changed much, but on gold, that's where we start seeing a little bit of a potential difference, right? When the index markets are crashing, people are looking for shelter markets. Now, it's hard to say the index markets are crashing. They're down quite a bit, don't get me wrong, but they're not a crash to me, you know, 30, 40, 50%. That's more of a crash along with me. You're going to see a lot of news announcements later today on the stock market crumbling and all of this. And this is something that we've been waiting for a long time. I've been constantly talking about how we're a little overextended on the index markets, and we're finally pulling that back. This is when people are going to start looking for shelter markets, how to avoid the most damage possible. And that's where we have markets like gold that start stepping up to the plate, like bonds that start stepping up to the plate, alternate investments that get them out of the stock market but still in the game. Now, gold has yet to really kind of show their hand. We're just kind of getting a little bit stuck, and we have a kind of a wedge forming for well, this little bit of a pullback. I mean, we've been bullish for quite a while, since really the mid-December. And we haven't had that much of a pullback. Off of the highs, we barely had any pullback, and so far, notably, we haven't even broken any confirmed swings. We haven't broken a previous swing low, previous swing low, previous swing low. None of them have been broken. And very frequently, when you have a strong trend like this is when you start getting those traps where you get buyers that have been holding on for a really long time. They bought way back here, and they're just trailing along with it, right? You're going to have stops that moved here, and then along up here. And I'm sure there will be some stops that move up around here, even though that isn't a confirmed swing. Not my preference by any means, but what I'm looking for then because of this is for the market to slide down and take out these most previous confirmed swing lows so that we can get a trap and a rally back up towards the highs. That means that major support levels likely going to be starting to step in at around 1324.5 or a little bit lower. But for right now, we haven't even really gotten that pullback yet. We had a big drop down off of the highs, and now the market's trying to reclaim some of that, and notably every single one of these lows has been very weak along the way. Likely every single one of them has been a stop run and a trap. But again, I'm looking for the big trap down here. This is the one that I've got my eyes on, and that's the one that has my interest at this point in time. For right now, just looking for the market to continue to kind of rattle around here. We'll see what the reaction is to the massive move on the index markets, but for the most part, I would like to see one quick snap down to those lows to see if we can trap down into 24.5 or lower for longer term potential purchasing power. Over on crude oil, we're getting a little bit top heavy here. The area of interest that we were keeping an eye on was 64.91. That held really, really nicely, rallied back up. We had a deeper correction down, another very nice move back up towards the highs, but notice one thing standing still, we have yet to break out through new highs. We're making lower highs, and on that move, the anticipation then is, well, maybe we're going to be in a wedge. Well, they broke through that as well. So now that leaves us with, well, maybe we're just dealing with a really kind of wide, gross-looking channel, and that would be next up right here, and we've got a little ways to go until we hit those lows. So the anticipation going into the overnight session is continued selling pressure down to test the lows of those channel lows. That's going to be at 63.39 or so on the current 4-hour bar, but around that area, looking for a channel low test. One thing to keep in mind, we have failed pretty heavily off of the highs with a first lower high and a secondary lower high, and that may mean that the sellers need to drive the market further down to get some deeper corrections. We have a lot of open territory down here. We have open gapping that was formed on the breakout move. And one thing that we always talk about when we have a breakout move, whether it's a swing high or whatever it happens to be, where the candle ends up being a breakout of about half of the candle, the markets love pulling back to those types of breakout points and creating very large potential opportunities. And that's what I'm looking for here on crude oil. We have a very strong breakout move that does end up being about halfway of the candle, and it has yet to be retested. That means that wide open areas of support are going to be floating around 62.55 for continuation to the upside. Before we can get to 62.55, though, we need to get down to the lows of the channel, and we might just kind of go sideways to a very wide bearish trend. Wide in the sense that the moves are really swingy. You go from really deep to really high to really deep, but you're not really making any ground. It's basically just a range tilted on its side. And that's kind of the way that it looks right now on crude, so anticipating the overall bearishness to continue to the downside to get a test of that channel low. And then we have the index markets. Oh man, oh man, oh man. The index markets finally correcting a little bit, right? This is the type of correction that I've been harping about for the last month that it needs to get in order for this bullish trend that's been going on for a very long time for it to remain healthy. If we look at a daily chart, we can see that we haven't had hardly any pullback through all of 2017. And a good few months out of 2016, and even then, inside there, those pullbacks really weren't that extreme. Most of the pullback was from 2014 to 2015, and a little bit in 16 before it started rallying back up in January. This is the type of correction that we need to see for the market to regain its health. This, although everybody loves seeing this, you know, it's too much. The market cannot sustain this kind of movement to the upside. We've been saying that forever now. We're getting that pullback, and this is where you start loading up your favorite stocks, your favorite markets that you really like hanging on to for the long term, and getting them on the cheap. These kinds of dips are what maintain a good, healthy move in the stocks and the index markets and any market. You need to see this kind of correction in order for a market to remain healthy, honestly. So what I'm really looking to do if we zoom into a 60-minute chart is, first of all, if you're doing anything but short, you're probably doing it wrong. This is heavily bearish right now, and we do have a very extended secondary leg. Likely what we're going to end up seeing is a little bit of chop and slop, maybe a quick snap up, and then an inevitable correction back down to retest the lows. And those lows, when we retest, those are going to be key levels of interest. The main thing that we want to know is, first of all, if we test the lows, how does that low test look, right? We have this big move down, we have a nice correction inside of it. In this case, actually, it looks more like this, where we have the move down, a little bit of a correction, big leg down, a little bit of a correction. We're here right now. I'm looking for this. What do we do here, right? Does the market simply just go sideways and retest those lows and then immediately fire back up? That situation one, that could mean that we're putting in a short-term bottom. Or do we do something like this, where the market goes down and we slam lower? If that's the case, then we're looking to continue on to our merry way for the bear trend down. It all depends on that reaction at the lows. Either way, though, all scenarios point to a retest of the bottom. And right now, we aren't exactly on any type of corrective phase yet. I'm looking for something like this to be put in for several hours of kind of sideways back and forth movement, and then another test of the bottom. So looking to sell. That's really what it comes down to. On the index markets, we're looking to sell. The S&P, the Dow, the NASDAQ, all of them are heavily bearish, just looking to sell for continuation to the downside in the overnight, likely going to find a little bit of a range-bound sideways movement for a while, and then a continuation breakdown to new lows. So that's going to do it for the outlook. Really, the big takeaway from this, especially in the index markets, is this is what is needed to maintain a healthy trend. Don't freak out. Don't start throwing everything at the wall saying the world is crumbling. Even if this drops another 30-40%, it's still considered healthy. That's what needs to happen for a strong bull trend to keep going, right? You can't just go straight up. The markets don't work that way. Now, this is also a time where you might want to start looking at, hey, you know, some of my favorite markets, pull up those stocks or those long-term holds and say, well, I might be able to get this on the cheap now. You might be able to pick up some nice deals on some of your favorites. This downside move, do I think it's done? No. I think we still have more downside movement for well, I mean, for the next couple days, potentially. If we look at a daily chart, generally speaking, a good, healthy correction in a strong trend is about 10%. And right now we are at right around 9.5%. Another 0.5% or so would put us down at around 95.80s. In all honesty, I would really like to see a 15% correction, which would mean that a 15% correction would put us at around 2400s, 2444 would be a really nice area. And then anything below that, 20%, obviously the next big one is going to be around 2300. So we still have plenty of room to fall. So don't get too tied up to the downside, though. In the long run, this is still bullish. This is the first correction we've had for the last year and a half. Anticipate this to go a little bit further before we start picking up that upward momentum back towards those highs again. Could be in this downturn for several months, potentially even a little bit longer, depending on how heavy this ends up getting. Either way, though, like we always say, make a plan, trade those plans, follow the rules, and you'll be A-okay. Until next time, we'll see you then. Stay safe out there. Don't get too tied up into these markets. You still got to sleep. Don't forget that. And we'll see you all tomorrow.